Every time the market changes its rhythm, millions of investors are left wondering what comes next. When market conditions shift unexpectedly, uncertainty spreads fast, leaving investors questioning their next move. Is this the end of the boom, or could it actually be the start of fresh opportunities? Quick flashes show AI stocks surging, bonds climbing, and inflation ticking upward, all signs of a market in motion. Today, we're breaking down the top 5 market risks and investment opportunities for 2026 before most people even spot them. Welcome to Money Mastery, your step-by-step guide to financial freedom and wealth creation. We're not relying on random guesses here. We're looking at data-driven insights that Wall Street is quietly paying attention to right now. Let's start with the first major market risk for 2026, AI stock valuations that might be racing ahead of actual profits. AI stocks have grabbed headlines and caught fund managers' eyes, but many now flag them as a top risk when prices outpace real earnings. The problem is simple. When AI hype pushes prices far beyond what the fundamentals support, a disconnect forms. A price correction can reset expectations quickly, shifting investor sentiment and creating new valuation signals across the market. Now let's look at the second risk, bond market volatility driven by rising yields. Rising bond yields directly fuel market instability, creating turbulence that ripples through the financial system. When bonds rise fast, stocks typically struggle, and smart investors treat these shifts as early risk alerts. While both matter, bonds form the backbone of the entire financial system, making them even more critical to watch than stocks alone. The third risk is inflation resurgence, which can force central banks to raise rates even when prices seem calm. Renewed inflation triggers rate hikes, sparks market reactions, and squeezes profit margins across multiple sectors. Core inflation and weakening consumer spending both point toward a profit squeeze, especially for companies relying on consumer demand. Risk number 4 centers on elevated consumer credit and credit card debt that drain economic momentum. High consumer credit connects directly to economic growth drain, as debt obligations eat into spending power. As debt servicing increases, consumer spending decreases, which then slows economic growth and weighs on stocks. The fifth risk involves trade tensions, tariffs, and geopolitical uncertainty that raise costs and limit expansion. Trade tensions, tariffs, and geopolitical uncertainty all push company costs higher, slowing growth for internationally exposed firms. But here's the good news. These risks also create real opportunities for 2026. Risk isn't just danger. It's also opportunity. The first opportunity is a rotation into value and quality stocks when growth names correct. When growth stocks correct, quality names with strong fundamentals emerge, creating value opportunities for disciplined investors. Higher interest rates also make bond strategies and dividend-paying stocks more attractive than pure growth plays. In this environment, bond yields can offer more appeal than chasing growth, shifting the investment landscape. Sustainable ESG investing represents the third opportunity, with institutional money flowing toward long-term environmental and social themes. ESG investing connects institutional investors, secular growth trends, and long-term themes into a cohesive strategy, gaining real traction. The fourth opportunity lies in digital transformation and fintech innovation reshaping how finance works. Fintech innovation is transforming money movement, portfolio building, and capital allocation, proving that tech isn't gone, just evolving. So how should you position your portfolio for 2026? Don't chase headlines, align with signals. Build a balanced plan that respects risk, captures opportunities, rotates when leadership shifts, and uses cash strategically. Now let's wrap up with a few quick ways you can stay connected and help shape what we cover next. If this helped you cut through the noise and spot the real signals, hit that like button, subscribe to Money Mastery for your roadmap to financial freedom, and drop a comment telling us which risk or opportunity you want explored with real examples. Thank you for watching. We'll meet you in the next video with more trending